Hey traders, this is Christian from Tribeca Trade Group, and it is Wednesday, September 11th, and we'll go over the technicals first in the S&P. We'll also look a little bit more at what happened in the small caps and micro caps, which I find it funny. Nobody's really talking about the micro caps, which is okay. If you're not familiar with that ETF, it's IWC, and I'll go over that in a minute. But man, what if you look at just the last couple days in the micro caps this week? The micro caps are up 6.7%. Small caps also, big outperformer this week, up 4.7%. So before I get into the small cap rally and the micro cap rally, let's just talk about the S&P technicals really quickly. Weekly chart. We do have, by the way, we've got a couple big events coming up the next couple weeks. So you want to always, in my opinion, of course, video for information purposes only, not giving out recommendations, but always want to kind of be aware of your risk when you have these types of events, and watch how overbought we're getting in the short term. So weekly chart, we had after we had 4 down weeks, a couple up weeks now in a row, and it looks like we have the chance to be retesting those 52-week highs. We've also got a trend line drawn here, which we're kind of butting up against. But in the super short term, and here's the move above value, a little bit of digestion, move higher, right? Yada, yada, yada. You probably know all this. Here's where, my analysis gets a little bit deeper. When we look at the shorter term charts, and we started the week right at the top of value. I thought we would have like kind of a decision week to kind of go from here. We fell a little bit yesterday. We've had all kinds of rotation underneath the hood, and managed to get above value. So we do have a little bit of some clear skies ahead. You got, except for this virgin point of control, so not that many. So these are like short term, right? When you're looking at 1 hour virgin point of controls, which are what these are, it's a lot of, it's basically overhead supply that you're going to kind of come to, right? And it's kind of it acts as a magnet, right? And it kind of comes to a head, right? All this volume that was here, that'll probably be a good place to take some targets in the short term, right? Again, we're on a 1 hour chart. We're not on a weekly chart. So, they're really good places to kind of shoot for targets and then take off a little bit of money. Here's your support again, 2080, 85, but this is another 12 handles up. So, we'll see if we can take out that level this week. So again, great level to watch in S&P futures. That's 3,014 to possibly shoot for. All right, so let's talk about IWM, which did take out. Let's see, did it take this thing out? Yeah, it took this out. So this is what I've been trading the last couple days. I wasn't on this trade that early. I know some people taking victory laps on Twitter about being long small caps for weeks now, but I just got long yesterday. I recognize that it had a chance to go, and nice 2-day trade. Same thing with biotech, which we got long yesterday too. And this all goes, all is transparent in the room. I'm not touting any trades that we put on. We just happen to kind of catch a couple of it, and I feel lucky when I find those opportunities. But so IWM, it is pretty overbought here on the 1 hour. If you look at the RSI, it's an 88 at this point. So this was basically the place where I thought we could get to in IWM. So really, really nice move. So let's just take a step back and forget about the short term, that we're hitting a little bit of resistance there, and a previous area where there's been a good number of volume. But remember, I find this funny, right? Because I think everybody getting a little bit upset that they were selling momentum stocks. A lot. I was just on the TD Ameritrade network talking about, hey, it's not just software; it's basically anything that has been a hiding place over the last 6 months. Defense names, right? I was talking about HEI, for example, right? This is not a software name, but if you go through, like Merck was another one. Kramer was talking about that. I posted a chart yesterday of Merck, saying that this has happened before in Merck, and it has been a good buying opportunity every time that this sell-off has happened in Merck. This was in April. I don't even know why somebody comes in and does this, but you could take advantage of somebody being stupid, because every time this happens, Merck seems to bounce back. Now sometimes it doesn't bounce back in a day, but if you stick with it for a couple weeks, couple months, it's made new highs every time it's done one of these. Barely made a new high here. Maybe there was a little bit of negative divergence there, where RSI did not get overbought, but it seems to come back pretty well. Also, the credit card companies, right? I mean, all of these areas. CME is another one that they just became crowded places where people were putting their money because you didn't want it personally, and I think a lot of investors did not want to be in trade war sensitive stocks. Industrials, financial, even the financials with, that's a kind of another situation, but that's a lot because of the interest rates. And when I talk about interest rates, we had some great questions about interest rates in the pre-morning session that we do every day at Tribeca Trade Group. And somebody said, well, why would the financials be going up if they're cutting interest rates in a week, or there's a good chance that they're going to cut interest rates? Because those are the short-term interest rates, right? How banks make money is when the yield curve is upward trending. So when it's flat or even inverted, banks don't make money there. But TLT is the long bond. Remember, the Fed does not change interest rates on the long end of the curve. They're doing it on the super, super short term. So as this goes down, it makes banks, there's a very, almost a one-for-one relationship. I don't want to say one-for-one, but there's a very strong relationship or correlation. When bond prices go down and yields go up, people tend to go into bonds. People tend to go in financials, right? So that's also part of the story the last couple of days. So if you're not comfortable with that, and if you don't want to go into financials, there's definitely other areas to go into. But I do find, before I leave the conversation on small caps, everybody was wondering, again, including myself, why aren't these small caps participating? It's a warning sign, small caps breaking down. Now that they're going up, that's a good thing, right? And micro caps, which I've been saying it hasn't looked right in a while, look at these things explode higher. So I really think that this is what you want to see. And I put a couple notes. You could go through my Twitter page from yesterday, and I made, I think, 6 points on why the rotation is good. I really think that a lot of the growth names got tired, including those software names, right? We saw a lot of software names the last couple weeks report earnings, strong earnings, and the stocks went down. That tells me that they're way overcrowded. So where does this leave all those groups? The Visa, the MasterCard, the McDonald's, the defense names, the medical devices. Now it gets interesting. Now once they've had a good sell-off, some of those areas become enticing again. And again, it usually takes a little bit more than a couple days. So have your spectrum, your time spectrum, a little bit more than a couple days. Have it a couple weeks, a couple months. But that's what makes the buying opportunities and gets people excited about putting money to work, is when there's a sell-off in some of these names. So that's kind of why you have a little bit of almost like Tinder. When so many names sell off, because now they're attractive, right? I mean, would you rather buy like Visa and MasterCard? Would you rather buy them up here or down here? Same thing with Roku, right? Which everybody's been, would you rather buy Roku all the way, at 187? Or would you rather let it settle in, maybe put in a bull flag and look at it, over here? So this entices growth investors. And if you remember the last month of price action, especially in August, right? I've been putting up, if you're a regular viewer or if you're a member of Tribeca Trade Group and you're watching this video, you know that I've been talking about this spreadsheet, for the last couple months. And the reason why, because it tells me what areas people are going into after the market opens. And the majority of days, not every single day, but the majority of days we've been seeing the market open, when the market opens up 30 or 40 basis points, what happens? It gets sold. In most names, if you were holding overnight, you had some profits if you were really quick on the open. But the majority of days where you come in and Europe is up a 0.5% to 1%, and the S&P is following, up about 40 basis points, what happens in the first 15 minutes? Things get clobbered. And then it's try to see a build throughout the session to kind of recover some of that initial sell-off. So, that's people taking profits and being too scared to hold anything because things have gone to a valuation level that just got a little bit too high. So anyway, that's my quick take. Does this mean that right now you should pile into some of these areas? No, I would be patient now that we've seen this move. And again, if you caught a couple of these moves, but let this digest, right? This is, in my opinion, right? If this digests a little bit, perfect. Let's talk about biotech for a minute because this is an area that I think is interesting. I put this chart on Twitter a couple times today saying we could get to 83. So we hit it, right? It's overbought now. Let it digest a little bit and you'll have there could be plenty of opportunities after a little bit of digestion because there's another one up here at 85. But I would not chase with an RSI at 79, 80. So again, you could tell I'm a little bit more. I got excited. Initially, and I want to talk about this too. I was caught in some trades, right? I mean, I was caught in a couple trades where things fell so quickly, and your initial reaction is, "Oh, geez, what's going on? I'm in a couple of these positions. This is in a couple of these positions. This is horrible, right? I just lost some money." That's the initial reaction. The quicker that you can get over that, which is what I tried to do yesterday, is to say, hey, well, where are they starting to throw money into? And you started to see the last 2 days, stocks move faster than they've moved in a couple months. And again, sometimes it's not always the usual suspects. If you can get over that and look at some of the new opportunities, it becomes much more exciting. So again, and I'm sure nobody will say it on Twitter, but I had a couple stinkers, right, in positions, right. I've been in medical devices. A couple of those positions came back today. Abbott came back, ABT, but I was in Boston Scientific, which, really a shakeout move there. But I'm confident that that I think that these have a chance to come back. And then McDonald's, which got hit over the head, which I still don't understand, but broke the 50-day moving average decisively on strong volume. But hey, listen, it happens. It's part of trading. The quicker that you can get over it and move on and look for where there's really good opportunities. And for now, what I said on our private Twitter is, hey, I'm still holding this McDonald's option trade, but there's no reason for me to rush it. There's no, one of the things I think sometimes inexperienced traders will do is say, well, the momentum, they're waiting, they're jumping the gun on when momentum is going to return. And I think for most of these growth stocks, that's why I said give it a little bit of time. Wait for that momentum. What I do on days like we've seen, because again, I'm not going to completely abandon and not look at growth stocks anymore. What you do is you set alerts where where you think buyers might come back into, and then you just kind of wait. It's a little bit like fishing, right? You just kind of throw out some alerts and wait till they bite a little bit, but don't force. I'm not going to throw more money at a bad trade until it's actually shows some sign of life. All right, so we'll leave it there. Keeping the video under 15 minutes. We'll go over the pre-market session tomorrow. We'll talk about Draghi and what he says, and we'll go from there. Have a great night, everybody. See you tomorrow.